What's going on, everyone? Welcome to another weekly review. Second week in the challenge, and it was a good week in the market. We had two trades taken, one win, one loss. The win was on USD JPY short. That was both trades taken on 0.5% risk. The USD JPY short was about 5.15 R on the half risk with 50% closed at 2R. Banked about 1.8% profit in total there, and then loss on Euro USD 0.5%. So collectively on the week, about 1.3% up. Came from drawdown from last week, but closed with the account, in a positive of about 0.3, 0.4%. Both those trades, full recaps on those were done on my trading view and published there. The link to that is in the description. So if you want to see a detailed breakdown of those, then be sure to take a look. Quite a lot of, I think, lessons and takeaways. But I think just looking at this week and as I was reviewing, key theme was that I had a bit of, what should I call it? I was trying to find a fancy word for it, but after taking that initial win, I was just very hesitant to execute in the trades that followed. There were 2 or 3 opportunities that came after that, and it's either I was too restrictive on my trade parameters, which led to a mistrade. And then again, hesitated on EU, just looking for too much confirmation. In this case, I was looking for correlation on dollar index to take that position, which was correlation that my plan doesn't say I need. And that also led to a mistrade. And so missed out on, I think, even more upside this week. The trade that I eventually did take was a loss, but that was a key trade just in terms of mistakes that I did. Obviously, did quite a few things well this week, just followed the plan. This one, I followed the plan and my kill zone forecast, even though it resulted in a mistrade. Again, I was a bit too restrictive on my entry criteria there, which is why I've kind of just got it highlighted. But then some good things I did do was just forecasting multiple scenarios on GJ. This was yesterday, because it was a bit unclear, and I think that can go one of 2 ways this coming week. That led to me kind of resisting pulling the trigger too quickly, which would have resulted in a loss. So I think looking at both sides of the position, both sides of the trade, did work out quite well for me in that sense. Small technical mistake as well, kind of just prioritizing the lower time frame over this 4-hour area, which just can't really say I would have avoided taking the position, but it's just something I realized in hindsight. The trade met the plan, and I think at that point I was also just looking to execute, just to get out of that sort of hesitation kind of phase. Some things that I kind of learned from the mistakes and things I did well was that UJ and GJ, which are quite heavily correlated, should still be looked at independently. But if one setup ticks all the boxes and is ready for execution, then I need to assess whether the other meets the plan. And, if it does, then I should execute regardless of where my ideal entry on, one of those setups was. Because normally when they move together. And so if they both meet the plan and, if I forecasted it, if one didn't, come up 5 pips higher than I thought it would have, if I can still get my ideal risk to reward, then I should take the trade. And then, just starting to pay a bit of attention to the 4-hour candle close for my entry, as well as the candle that I took the entry on, because something that seems like a common theme is that if I've got 2 candlesticks counter to my bias, both before I enter and as I enter, then more often than not, that's going and hitting me out at stops or invalidating the bias. That's something I'm just going to start paying attention to, potentially for when I revise my plan at a later stage. There'll be more insights there. What I can do better next time, just some actionable steps. Just kind of be open to shifting my parameters during execution mode if it's still within my plan. Obviously, when I forecast my setups, I'm very specific with what I want to see from the market that will give me confirmation that my parameters have been met. And then it comes down to obviously the 15-minute reversal, as well as that micro time frame confluence, the 1 minute and the 5 minute. But if I notice that things are developing differently to how I forecasted it, I should be open to adjusting with how the market develops, as long as it's still within my trading plan. That might mean, I take a wider stop, but again, if I can reach that minimum risk to reward, then I should still be open to taking it. And then, compare the difference in my stop on the ideal position. And if I had to take the position, now, hypothetically, if things have shifted and the market's ready to go prematurely based on what I thought it was going to do, just mark out the frame the trade, mark out the risk to reward. Does it really make a difference or big difference if I'm going to bag, 3R as opposed to 3.5R or 4R, or if I'm going to bag 4R as opposed to 7R? Those, in the latter example, are still exceeding my minimum risk to reward. So I should be open to that, because my stop's going to be in the same position anyway. So that's something, I feel like I can do better. And then the one most important thing I'll be working on improving this week is being less restrictive on trade parameters and stop placement, as this resulted in a lot of missed profitable setups this week. Missed about four setups this week, one on each of my pairs. The one didn't meet my plan. That was USD JPY, because the daily targets had been met, but the other three were well within my plan. So if the trade meets the plan and I can achieve minimum risk to reward to reasonable targets, then I shouldn't hesitate to execute. And the most important thing this week that I'll, continue doing is forecasting multiple scenarios in all pairs, for every kill zone, even if the bias is super clear. I think rather I let my plan tell me what the trade parameters I should be looking for are, rather than assuming, what it is based on, at a glance, okay, it looks like market's bullish. And obviously I can confirm that, but I should still look at the other side just to make sure. So that was the week. Alpha Capital, just for that transparency, you can see equities positive now. We obviously had that little positive trade. But this dashboard's a bit weird because I thought this would show, you can see the positive trades there, so break even. But I'm not sure how this all gets calculated. Then you see my trade journal. That was the USD JPY, the partial profit that I took, and then the balance that closed out, as well as then the Euro USD short that I took later in the week. That is still looking good. So and I think a lot of opportunities lining up this week. So again, be sure to check out that link in the description to my trading view, where I post daily analysis and trade recaps there. If not, I'll obviously catch you in the live backtesting on Wednesday morning. Remember, guys, consistency is the choice you make when you start doing the things you should be doing day in and day out.